Hey everybody, and in this video is another follow-up video for the European gas crisis. And in this video, we're taking it slow and thinking through what are the long-term consequences of the European gas crisis. Now, if you are new to my channel, we have already made 6 videos on the European gas crisis, from will we be out of gas this winter, to the US oil commodity price, to top 5 global oil and gas companies, to top 5 Canadian oil and gas companies, to the China energy shortage and coal crunch, to China energy crunch and inflation. So if you want to go back to watch those videos, then you can pause it and go back to watch it now. And if you have been following my channel for a while, you probably figure out how to make money from this information. In fact, this disaster, I have made it quite simple for you to make money from it. If you just look at episode 3 and episode 4, you'll get a pretty good idea. And if you're wondering, hey Eric, I'm not sure how to make money from it, then the answer is really you just buy those stocks. And here is my position for oil and gas. I'm not going to name them until I exit it because I don't want you to manipulate into thinking that you have to buy the same company as I do. And plus, I don't really think there is a very strong need to know exactly what that company is, or else it will skew your perception in terms of what's a good company without doing the research. So for the last 2 weeks, I've been holding on to the energy position. I've made around 22%, and I'm still holding because this event is not over yet. So before we start off with oil and gas and what are the long-term consequences, I just want to celebrate another 3 successful case studies where Sam made 41% from LMT, Mike made 46% from RTX in 5 months, and Mike also made 45% from LHX in 2.5 months. So congratulations to you two from Investing Accelerator. These are great gains. So let's think through the problem here, because this is quite an important problem, and depending on our conclusion whether there is a long-term impact or not, there are some devastating consequences coming up. So in the past, when people are working and we have enough energy supply, the energy supply is able to meet the demand. Now in the recent years, we're transitioning out of fossil fuels, and the G7 is forcing China to get out of coal. And right now, the energy demand is actually higher than energy supply because we're reopening our economies, everyone's trying to make money again, so on and so forth. So we're in a very different situation. And one of the things we need to think about is how quickly can the world respond to this energy demand by increasing supply? Now, looking at the last 6 episodes, I think the answer is it's not very quick. It's going to be quite slow because a lot of oil and gas facilities are operating at max capacity. Shipping containers are at an all-time high. So I don't think the supply is as flexible as we imagine. So let's think through some of the consequences here. Now, when you think between the separation of rich and poor, the rich will probably continue to get access to electricity, where the poor and middle class will have energy outage. Now, this seems like a small problem, but when you think about the winter that is coming, people living in the cold, and they actually need heat, if there is a country that runs out of electricity to provide heat to its citizens, then a lot of people are going to die this winter. Now, this actually happened, in Canada or in Northern Europe or in Northern China in the past before. Like every year, the cold will take a certain number of people with them. But I think this year is going to be one of the worst years, because there's actually an energy shortage, meaning that even if you have money to want to pay for electricity, you might not be able to because they just don't have enough gas to produce that electricity. Now that's probably the grimmest consequence. And if you look at, the third bullet here, I've written down is the energy bill for individuals and corporation will become more expensive. Now, I think this one is pretty obvious. So who will really benefit? Again, the oil and gas companies. Now, for some facilities in a society, they'll actually require a constant supply of electricity. So when we're thinking about what kind of facilities those are mainly hospitals. And I would say most of the hospitals already have a backup power supply. But then electricity storage will become even more important during this winter. So there's going to be an increase in battery demand. Now, right off the bat, I can't think of any battery companies that provides for hospital electricity. But if you do know a company, then I suppose they'll benefit from it as well. Moving on, if you have been paying attention to China and what they're trying to do to solve this winter's energy crisis is that they'll secure whatever form of energy possible. So previously, I know they mentioned that they'll promise not to use coal anymore, but the reality is the infrastructure haven't caught up with that yet. So when you compare between North America versus the China energy mix, China actually still has a heavy reliance on coal. So for this year or in the next couple of months, they're not going to be able to transition. So they're still going to buy up coal. And if you look at coal prices, they are going up. So that is going to worsen global warming. Now, depending on how far this consequence is being taken, it might lead to a very catastrophic ripple effect. But let's not go down that path for now and assume if they're able to survive this winter and burn a ton of coal and kind of worsen global warming, we're still going to be okay. Because if we reach that tipping point, then we'll technically be screwed. So, okay, higher energy costs will cause all goods and services to go up. So meaning a lot of stuff will become more expensive, and some of the obvious things are travel costs, like driving your car, like going on a trip. And as the economy is reopening in November for United States, for Australia, more and more people will want to travel internationally. In fact, I know a lot of my friends are already traveling. They have been constrained within their own little city for a very long time, so they have to travel. So there's going to be a very high demand for travel, but the cost for traveling is also very high. So when you're looking at other things like manufacturing, which is mainly coming from China, mining, coming from all over the world, which requires a lot of energy, commodities will be going up as well. And in fact, I think we already observed that copper prices, iron, coal are all going up. So when input price goes up, the only thing a business can do is really pass through that cost to the end consumer, which means the output cost will go up along with it. So overall, the cost of living will become higher, more expensive. Now notice I used the word cost of living. I'm not saying the standard of living will be higher. I'm saying the cost of living will be higher. So that means you're paying more money for the same slice of pizza. You're paying more money for the same avocado toast you're getting. And basically, the standard of living goes down because you're getting less bang for your buck. Now, this might be hard to imagine, so let me just try to break this down for you. So let's say you have a budget of food costs of $1,000 to $2,000 a month. Now, assuming the input price goes up by around 20%, this means you need to now budget $1,200 to $2,400 a month. Now, this might seem like a very insignificant amount of increase, but when you take a step back and you look at, across the entire country, how many families will suffer because of this price increase, this will become a very significant amount. So ultimately, the people who are paying for the higher cost of living will be you and the people around you, because all the businesses will have to pass through the cost. They can squeeze their margin a little bit, but ultimately, the input costs are increasing so rapidly that is just going to have a very lasting impact on the consumer. And when you think about the supply chain from inputs, processing to outputs, we're talking about at least 6 to 12 months coming up for a price increase. And when you're looking at companies that are, for example, Kleenex, they're increasing the cost of their products, Johnson & Johnson increasing the cost of their products in the middle of this year, it will probably happen again next year as well. So that's something you should be prepared for. So yeah, if you have some extra cash, if you are in a good position for now, then make sure you save up, because in the future, a lot of things are going to become more expensive. Now, due to the labor shortage and the cost of living going up, one of the things I think would happen is that people who previously go into retirement will come back out to work. Now, I don't think this will be an immediate effect, because I don't think people that go into retirement this year will coming back out right away. But what they'll realize as things become more expensive is that they don't have sufficient capital saved up for retirement. And I think this is probably one of the biggest problems with retirement is the future inflation might become so high that you don't have enough for retirement. So end up you got to come back out and work another job. So I know the pandemic has caused a lot of people to rethink, whether money is worth it, to rethink how they work, where they work, and whether they can be doing remote work instead of in the office job. But ultimately, I think this leads to a labor shortage, which leads to the cost of living going up and them not having enough money to retire. And finally, the last effect I have on here is transitioning from non-renewable to renewable energy. Now, of course, when you're looking at the society, we are smart. We try to address concerns that have happened before and ensure that they don't happen again. So for example, in 2008, there's a housing crisis. And afterwards, the Fed learned that they can just print money to solve that problem. So for the last 10-something years, we don't have a housing crisis anymore, or at least not yet. So when you think about that, after this year, Europe and China will have a very strong emphasis on renewable energy, because the last thing they want is really to be reliant and have an energy shortage next winter. And I'm talking about 2022 winter, not 2021. So again, I think renewable will still be a very important aspect of long-term energy planning. And in a way, that is a good thing, right? Because we want the world to move towards renewable energy, and we need to move there at a faster pace. Now, one of the things I didn't get to cover here is really housing costs. Now, this one is a bit more indirect, but this is something I've given a lot of thought of. When you're looking at, building a new home, whether you need furniture or you need the lumber or you need concrete or you need some resource that requires import and exports, I think eventually we'll come to the conclusion that there's actually a shortage on that material. And this will naturally restrict on how quickly homes are being built, which further increases the cost of a home. So if you previously think that, hey, the housing prices is going up so much, it is going to reverse, and right now you have an energy and supply shortage for the entire world, then you actually have a supply shortage for homes as well. And if that is the case, then it becomes very difficult to have lower housing costs because you can't build new houses. So when you think about that, then yeah, the housing bubble is not going to burst soon. It's not going to burst in the events where the world is constrained on resources and energy. So then that means unless people are willing to panic sell at a low price, housing prices are either going to stay where they are today or go higher. And I think it's because builders or developers cannot build them fast enough. So those are the consequences that I can think of for now. Now, some of them are pretty dark, but I think that's the reality of it. Some of them you can take advantage of, for example, like travel costs. Some of them you can't control. And, if the cost of living is going up, then what you can really do is to invest. If you don't invest, and let's say inflation goes up by 10%, then your money just decreased by 10% in the bank. So when you think about that as an investor, you really don't have much option other than to invest in the market. And you need to be smart about it. Because if you're not smart about it, then you're screwed. I realize my camera is frozen, but we'll just ignore that. So that's pretty much it for this video. This video summarizes the thoughts I have to date on the energy crisis. And it's kind of important to think through the consequences. And that's what I do in Investing Accelerator. Because once you think through the consequences, then you can have a glimpse of what's about to happen. And if you have a glimpse of what's about to happen, combining that with technical and fundamental analysis, then you'll be able to make a gain from it, more or less. Yeah, so that's pretty much it for this video. If you want to learn more about investing, then you can click on the first link in the description, and there is a 4-hour free training for you to attend. I'll see you in the next one.